let's get started on the lesson here. Let me go through this little bit of a lesson here, and then we'll go over the questions afterwards. Is that fine? So that we can cut this out and upload it, because
Sure.
that's what everybody wants, right? Because like some
Yeah.
people can make it, so that's for them. So I'll mute you guys for now, and then I'll unmute you guys here. Yeah, if that works. All right. So, so one big thing about options is, guys, you guys know the reason we trade options are simply, one of the biggest reason is this, right? If we let's look at, for instance, the best example, right, that we can set here is Amazon, right? Um, it's actually great that we have actually Amazon call pulled up here. So best example that we can look at is Amazon right here, right? You guys can't see it, but I have the calculator pulled up here, right? So what we'll do is just to show you guys an example, if we wanted to buy, let's say 1,000 shares, right, of Amazon at the open on Friday, right? So if you guys don't know what options are, you guys are gonna have to learn them, because I'm not gonna go over exactly what options are, but options are simply just contracts, right? Instead of having to buy actual equity into the company, you're just buying a bet till a certain expiration, right? So let's say you're buying one call on Amazon here at 32, let's say right at the open at the 32.26. What we'll do is we'll change it to a put, because it seems like a puts actually did better than calls. In hindsight now we can say, right? So that's why we're just going to use the puts here as an example. Actually, yeah, 33. Let's look at the 33.30 puts to be to get the best example. So right at the open. So this is Friday. Friday starts from here, right? So let's look at the actual stock. So let's say if we wanted to short Amazon, at the open at 33.26, right? To buy 1,000 shares, right? Borrow 1,000 shares from your broker and sell it on the marketplace, you would technically need how much money in your account, right? So 33.26 times, 1,000, easy, 332, I mean, actually $3.3 million. If you do divide that by fours, if you have a day trading buying equity, right, 4-to-1 buying power, even with that, right, you still need quite a bit of money, right? You still need 800,000 plus in your account to short just 1,000 shares. So with that 1,000 shares, let's see, what kind of profits you can make, right? So if we go from 33.26, right, and we say, our target will be 33.16, right? Right down here onto the 200 EMA in there. So if we're just looking at a quick little wash down of 10 points, right, with that 3.3 million, you would make about, $10,000. So you're investing about 3.3 mil to make $10,000. Doesn't seem that kind of good, right? If you really think about it. So instead of going that route, the route what you can go with is something like this. You can go with at the money options. So another cool thing is, just to show you guys an example here, at the money options usually have a delta. This is next week's, by the way. So, this is just an example. What we'll do is right here, where is it, man? Just to show you guys, the delta here usually is about 50 cents or so. This basically means every dollar a stock moves up or down, this option will move 50 cents up or down, right? So with options, as you can see, the delta increases until it kind of caps out at $1. So, right, literally at the top here, it's $1. So meaning this option, if you buy it, technically should move $1 with the stock, right? But because options are a lot, less liquidity, as you can see, only 200, 300 contracts, we can move a little bit more, right? So there are times where we move, 10 extra cents, more than the 50 cents that we were supposed to move, right? Just because of the spread, where you can get filled at a little bit of a better price than the actual, $5 point that you were supposed to make. Technically, you can make $5.50 because you just put your order out there on the ask, and the price was so fast that it just kind of drove right through the $22 where it was supposed to be, for when it was supposed to hit the 200 here. So that's a little bit more detail. We're not going to talk too much about that. But what we're trying to basically get at is this, right? With a 50-cent delta, you would technically need 20 contracts, right? Yeah, we'll talk about that, man. Open interest, I really honestly don't even care too much about, but it's just something to kind of get to look at, just to know, what's going on with the contracts, right, in the past. So it's just something that you can keep on there, but really doesn't really mean too much. But it's kind of good to, I'll kind of explain how I trade options and my best way of looking at options, right? Where I look at options, like the option that I usually buy, what do I look at, right? So I'll show you guys the options that I usually buy. You'll see kind of like a little bit of how should I say, if you go back into my history and see like the options that I buy, they all have one thing in common, which I'll explain to you guys today. But just to show you guys here, look, so instead of investing that 3.3 mil to get that 10 points, you can buy 20 contracts of this at the money at that time on Friday, right? This was the weekly option at the money, right? So basically means it has a 50-cent delta. Each dollar that this Amazon moves up or down, this option will move 50 cents up or down, right? So let's say you just buy 20 contracts of this, right? Instead of buying 1,000 shares of the actual stock. So if we go back here with each contract, that you're paying for 100, right, shares of this option technically. So technically, at the opening price of 14.42, right, for Amazon options, Amazon puts the 33.30 puts on Friday, you were technically paying $14. Let's say, let's go to the 1 minute chart to, make it easier here. Let me see here. Let me fix my screen here a little bit so I can see a little better. Yeah, you guys can see the low liquidity here, right? Which is a given with options, right? Because not millions of shares are being traded, unlike Amazon, right? The actual stock. So, but still, right? Let's say you're buying at 14 bucks to be generous, right? You're buying basically, one contract for 1,400, right? Times that by 20. So now you're spending about $28,000 to buy technically the same amount of shares as Amazon, right? For these options, right? But the issue is the actual decay value. Decay value, right? Meaning this options is either going to close below this 33.30 mark, right? And you're going to be in the money, which means it's going to pay you whatever the price it's at, or it's going to be above the money and you're going to lose everything, right? Or it's going to go to zero. So those are the two main things that you have to worry about, right? The time value. So you're not paying for something that you can just buy and hold for years, because look, if you're really going to do that and you look at some of these options, right? The 23, right? Gen 2023, right? Look, these options are crazy money too, man, right? Technically, you'd be paying $623 times 100 per contract, right? So you'd be paying about $62,000 per contract, right? And then, of course, right, either this is going to go to zero because it's going to close above 32.45, right? And if you really look at it, right, if you buy this option contract, right, and you look at something like this here, look where your contracts need to be. Your contracts need to be almost how many points in the money? Look, literally, they almost need to be almost 1,000 points in the money to be even, worth something. So technically you have to be right, but you have to be very right, if you know what I'm saying, right? Like to, make money on those. So getting that aside, so instead of investing 3.3 million, it's a better way of just investing that, 28,000, right? And making the same type of returns. How do you do that? Well, instead of buying 10 contracts, which is technically equivalent of 1,000 shares of, this option, because there's a 50-cent delta, you just buy twice that, and, just to make it simple. But let's look at the move now, right? Let's look at this Amazon move, which was from, right at the open, let's say from 33.26 here all the way down to about the 200 EMA, right? Which was tagged at this 9:45 5-minute candle, but we'll look at it here on the 1-minute time frame just to make it simple here. Let's just look at the 45 candle here. So let's say this candle tag, right? This 9:47 candle tag. So from the open, when Amazon opened up above this 200 EMA, what we'll say is we'll take the middle here and we'll retrace it down to about the low of this candle, just because we are going to be nice. And that's about how many points, right? Everybody can see that's about almost 15 points, right? Which means technically we're only going to get how many points in these options? 7 points, 8 points, right? But now, right, let's look at it. Where is it? Where's the tag here? Low of this candle, you can probably exit around there. And just to make it simple here, what we'll do is, there we go, because it's being a little hidden here, right? So you don't honestly really need to ever look at option charts, but sometimes it's good to kind of look at them and just see a little bit here, because it does help, right? So my bad, I'm just messing up with the tools here, right? Let's say you bought these puts, right? And look, you'd make about 9 points. Right. So just like I said before, right, with sometimes, a little bit of a extra, a little bit of a nudge, you get a little bit more than what you're supposed to. But then also at the same time, you have to understand that delta also increases in options as they move up in money. Right. Look, you're technically adding another 1 share to each, 50 cents. So basically you're adding another dollar to your 100, times 100 profit, basically what I'm saying, right? So as you move up here. So that being said, the easy way that I can tell you is I don't trade options just like anybody else, because look how illiquid they are, right? They're ugly, right? So all I do is simply I look at charts, I trade patterns, I trade momentum. But what I do is, instead of having $10 million in my account and making $30,000 out of that $10 million, what I do is I keep about, around a mil, right, in my account. And anything I make above that, I kind of transfer out, simply because I don't need it in my account. And what you can do is you can put that into other investments that will make you more money rather than have it sit in your account, right? So one of those things is you don't even need $1 million in your account, guys. And that's just me being generous, right? Time to time, yes, I get lazy and I leave more money in here, but it is what it is, right? You can leave some more money in there, but best thing to do is to take your profits out and walk away and honestly just, invest it back. So does that kind of make sense, right? Like how we trade options? Because now let's go back into, what is the upside? So, I mean, technically the upside is, you have to put in about, you can say a lot less money, right? Technically, it can be anywhere between from, you can put in about 1% of the money to make the same move all the way up to about 10% sometimes, right? Sometimes you have to put in about 10%, right, of the money that you would actually invest into the stock to make the same money from options. Does that make sense, guys? Because it ranges, right? Like sometimes options are $16 for Amazon, sometimes options are $50, $60 at the money, right? What's up, brother? Let me see here, man. God damn, man. How do I? Yeah, here you go, man. If you want to write the question, you can.
No. What's good? Wait, can you chart the options contracts?
Yeah, that's what we're doing here, bro.
Bro, I did not know that was a thing.
Yeah, that's the best thing, man, because you can go back and study, right? The option contracts that you traded basically instead, because that's the big thing, right? Either you'll be looking at numbers, right? Instead of just looking at numbers and going over that, it's way better to go look at the actual chart of the option, because then you can compare that to, the actual stock and see.
Wait, did they do like typical patterns and shit?
Yeah.
No fucking way. What?
You didn't know that?
Bro, you just changed my life. All right, weird.
Yeah, bro. I mean, dude, I mean, technically, I mean, being honest with you, bro, like sometimes they don't do technical, actual same patterns, right? Because remember what we talked about, right? Like you get those little bit of extra moves sometimes because there's the low liquidity and there is that, you know, play in between, meaning there's that spread, right? If there's a $5 spread here, you know, sometimes a dollar move can make you $5 on an option, if that makes sense, right? Just like that piece of crap shop stock does. All right. So if that makes sense to everybody, like, does it make sense that, you know, what are the upsides of option, you know, playing options instead of equity and, you know, because we're day traders, right? We're not investing for long term. Yes, if I was investing for, dude, for my swing trading account, you'll never see me trade options because I'm not comfortable with options, you know, decay because I haven't really honestly put enough time and I haven't gotten enough data of kind of honestly investing my money into options and holding for, you know, sometimes because sometimes my trades kind of last for anywhere between, you know, usually 3 weeks or so, but sometimes it can be 6 months before a stock does anything, and I don't want to kind of have it, you know, my contract be zero and then a stock end up ripping 20, 30 points, right? Is that an actual number, but it changes when market opens. It's a number of open contracts. Don't lose 100. Should that number be more than one? I don't believe so, bro. I think that might be times 100. I'm not sure, dude. It might be, but I don't think so. I think it might just be the actual number of contracts because this is not actual, you know, shares. Yeah, of course, bro. Um, Graham will put this out there, man. But this is basically the upside, right? So anywhere the options can be, you know, almost, you know, you can pay 1% to make the same amount of money, right? On some of these bigger stocks, of course, right? Um, you can play like penny stocks, low floats, and then there's warrants that you can play of stocks, but you know that's another thing. But there's so many different things that you can do. It's just about leveraging your money, right? Yeah. Um, so now let's go over the downsides, right? So the biggest downsides. Um, uh, Here we go. Let's see. Yeah. All right. Okay. There we go. All right, guys. So I was fighting with a lot of this ugliness here Friday, right? Um, let's go over some of this here. We want to do it on 1 minute. Yeah, let's just do it on 1 minute. Better, right? Options usually on 1 minute are ugly, man, because of the liquidity thing here. What we'll do is, yeah, with anything, right? You need good volume to kind of have a stock look proper. So that's why a lot of this option looks so ugly and choppy because it just literally does this disappearing act because there's that big spreads and all of that stuff, right, guys? So, okay, so now let's go over here, right? Technically, um, most hated, man. He's in here. What's up, bro? Um, I got you, bro. DD. That's what I'm here for, man. That's it. Just buy everybody what they want. Yeah, KK is right, but that's a little bit more detail, man. There's honestly, literally, I honestly feel like there's no point in even because, like, I feel like right, this is the best way of trading options for now, personally. There is a time where yeah, you can buy something like GameStop, right, very fucking cheap, and then you know as soon as it starts doing an exponential growth move where starts looking something like a fucking this, right, like a rocket here, something, you know, like this, you're gonna make shit ton of money, right? Something like this, right? When a stock starts doing this and it starts fucking ripping like that, this is where you make the most amount of money, right here on this little peak right here, because literally every move that you do, it's like literally times double, man. So, but um, that's for like long term, right? Like that's for holding. Honestly, I personally haven't gotten myself to believe in a stock for like a year or so. But when I do, I'll let you all know, and we'll all go in it. It's fine. Yeah. Uh, yeah. Yeah, we can do that, James. Yeah, I'll show you. Yeah, I'll let you discuss that, bro. If you have those options. I don't know if you still have the chart of options, but you can discuss that if you want. Um, James will go over his AMC play here afterward if he wants, but just to show you guys a quick example, the one big downside that I've seen for trading options, right, is sometimes that, you will get that move that you're looking for in a stock, right? Something like Tesla that we ended up shorting Tesla. So I ended up actually being initially long on Tesla at the 795, and then I ended up closing it out here in the 793s and, reverse shorting it. But the issue is, just to show you guys, look, from the 794s all the way down to, man, even what was the lows here, man? 788. Look how many points that is. It's about 6 points on, technically on the stock, right? Um, Honestly saying it could have been a little bit more. I believe I kind of stopped out on some of the sideways action here, but it is what it is, right? It happened. No, no, no. So okay, so it was this move. Okay, I was confused. Yeah, so I stopped down on some of this sideways action, um, but technically this was the whole move that I was holding Tesla for. So look at it, man. That's why I was like, it was more than 5, 6 points, about 8 points. You'll see both this on Roku and that, right? So what happens is, look, almost 8 points on Tesla here, and look, right, when I entered into Tesla at $6 for these option contracts, look what they kept on doing. For literally about half an hour, they just went sideways, right? They would have these crazy pops, right? Where you'd think that, technically, look, this only moved $1 when the stock was down like $4, $5 or so. So then, like, would you take profit? Honestly, like as a stock day trader, right? Like if you're looking at my eyes, right? You've entered into the stock basically around $6, right? On these options, which are 50-cent delta or so, right? Technically, maybe a little bit less, right? Maybe 5 cents less or so. Um, you go long here and you see the stock move 5 points down. Technically, you should be up about $2, $3 or so on these options, and you only see what, right? $1. What do? You can't take profit. I mean, technically, you can say maybe on the ask I was up at the right amount, but it really honestly, like usually on Tesla, I look for about 10 points or so. And those 10 points basically mean I look for about 5 points or so on my options. So technically I was looking at an exit around $11 here, which is at the top all the way here, right? So it wasn't anywhere close to this, right? So technically, when I saw these moves, I wasn't able to get out simply because I didn't want it to get out, right? But look, it kept on going down, up, sideways. So even on this peak move, when Tesla technically crashed here, right, all the way, when it went all the way up to about 1030 here, as you can see, literally as low as 786, right? This was only up 2 points, right? 8 points move down on Tesla, technically, right? On the stock, you should have been, if you would have bought 1,000 shares to the downside, if you would have borrowed 1,000 shares from your broker, sold it in the market, and bought the 1,000 shares back, you would have made about what, $8,000. But with options, 20 contracts, right? You'd be up what, 2,000. So that's the whole big thing, right? Unless you get that immediate momentum, unless you get that immediate sell down, or unless you get that straight sell down or straight sell up, that's where it gets you, right? That's where the time, right, kind of really makes you pay, right? Because people can just keep on selling contracts into you until, they're just able to hold you right down, right? They're able to hold you down until it's your breaking point, right? Because let's what, man, you're at $6, you buy in, it goes up to about $8, right? okay, you saw a pretty good amount of profit, right? But then it starts losing, you start losing the same amount that you were up. What do? You probably end up cutting it, right? And then guess what? Right then, boom, they reverse it right back up. So that's one of those big issues that people always talk about, right? Me even being, very public here, dude, like there's no way ever you'll ever get to see exactly where I go in, where I go out, because people could easily just honestly literally team up together and keep your options down only until, you know, honestly they need to, right? That's what technically some of these market makers do, right? They make the stocks kind of stay down a certain price. What happened with GameStop, right? You just keep on fucking going down because they were getting fucking greedy, right? So one of those things is that's one of those big reasons that options keep on going sideways and you're not able to get out, and then you get frustrated and then you just close it, right? So at least with Tesla, I was able to make some of my you know, loss back there, right? The $12,000 plus loss that I had on Tesla, like I technically made almost all of that back, right? The first loss that I had to the long side. So I was able to buy, right, my way back into, profit, right? But sell indicator, bro, don't worry about the indicators, bro. Indicators don't do anything. That's another topic we'll talk about. This is just something to personally help me, honestly, right? Um, but um, still, I was able to kind of put myself back into profit, right? But the biggest issue is that, technically I was looking for a 5 point upside, right? Technically, I was looking for about a $40,000 profit total on Tesla with the size that I was trading, right? But I wasn't able to see that. So, guess what? I ended up cutting loss. This should have technically, right, on a regular day when, Tesla moves, straight down without doing these sideways like jigsaw moves, right? This is the algorithms that are doing it, right? You would have a way, way bigger profit, something like this, where once they finally realize that they've got them, right? That's it. It's game over for all of these buyers that are keep on algorithming, basically algo buying these dip buys and just keep on doing these wash sells and just keep on having these algorithm just wash sell ups, right? And they just keep on washing these stocks and buying it up, washing it, buying it up, trapping people. Once they finally knew that they were caught here, right? And they actually started selling under the 787, right? You can see what they actually did. Boom, man. There's no stopping them. That's it. Look, these options went from $3 all the way up to $13. 300% gain in the span of what? Literally 1140 to almost 1240, almost a 300% gain, which is insane, right? So if you really look at it, right, in the hindsight, right, something like Facebook, right, a stock that you would invest in long term, um, 4 years or so, let's say, right, technically from 140 all the way up to this crazy ridiculous year that we've had, right? Even if you would have just picked the bottom of it, you still wouldn't have gotten that 300% return. Does that mean you take all your money and you just put it on options and you just put your house on it and you just wish that one day you get these crazy moves on Facebook or Tesla or one of these crazy moves? No, you're crazy if you really think that's going to work, because just as easy as you can make money, that's just as easy you can lose it, honestly. Because look, right, even though these option went from $3 all the way up to $12, right? Still, man, you could end up losing all of it too, just like that, right? All you had to be was just had to be the sucker that bought 775 contracts, right? Look, dude, the stock dropped how many points? Look, 15, 20 points, man. Stock dropped about 14 points. 1 second here. Stock dropped about 14 points, right? And person that bought these contracts, right, at dollar, they saw, pretty good return here, right? Or even at the open, let's say they bought these contracts at the open and they saw 100% return, but they got greedy because they thought that it was going to go to 500%, right? Because they bet their house on it, right? right? They sell their house, they bet it on the option. Now they were up 100%. They were like, okay, I bet my house on it. At least I want 600%. Well, guess what, man? Literally, the stock closes what? 5 points away from your, you know, in the money price, and boom, guess what? Lost everything, dude. It's gone. It's done. Your house is done. So yeah, that doesn't mean that you put everything that you have in it, right? But you know, options, the way I trade them, you just get these quick moves, man. You know, instead of buying something for $800, you just come in here, right? You buy this for $1.40, man, right? You actually put your house on it, right? You instead of buying 1,000 shares of, you know, and putting $800,000 into this, you know, what you do is you can put about, you know, shit ton of money, man. Yeah, fucking 5,000 contracts, man. It's insane. Think how much money you would make. Yeah, like 500,000, man. Insane. We're on this 800,000. You'd probably make what, 5 6 points, 5,000 or so. Yeah, so you know, same thing, man. Just to look at it, simplified version of it is this. Look, the stock moved what, 1% there. You got 100% move here. So if you made 5,000 there, you could have made technically 200% here, right? If that makes sense, right? Apple does this all the time. Um, yeah, man, that's bro. That's the whole thing of market making, right? Right. If you guys think that this is honestly, personally, from what I've seen in the past, right? Like personally from my experience, I feel like it's so easy at a point where it's just like I don't, man. It's really hard for me to kind of just throw out the fact that I feel like the market already knows what it's gonna do on the day before it opens. Because sometimes, man, you can pinpoint entries and exits so well, but at that same time, just because there's so many possibilities that unless you have just paper, I mean, unless you have computer, vision of just kind of storing data, right? Like, what is that called, man? That memory, that, picture memory or image, what is it called? Unless you have that, I feel like photographic memory, yes. Yeah, picture memory, photographic memory. Like, I feel like photogenic, yeah, man. Either one's fine, man. But unless you have that, like I feel like there's no way of you kind of being 100% sure. But there's a way, man. I'm being honest. Like I promise you, if you look at enough charts, you will exactly know where your entries are and where this stock will go 100% of the time. But then you just gotta have the bees, right? To kind of be able to put everything on it. That's the big thing, right? Execution is half of it, man. You can see the world fucking burning and all of this shit going on, right? We all saw the fucking pandemic. We all saw market crashing, right? We all saw it, right? With our own eyes. How many of us put our life on it? Right? How many of us not put a life on it, meaning how many of us ended up putting, right, selling our house, going into renting and buying every penny, right? Like every penny worth of the market at $220, and now it's worth almost double, right? How many of us did that, man? Not too many, man. That's the big thing, right? Execution is a lot. That's the whole thing, man. That's why some people were made billionaires, right? Like the guy that invested in Mara, man. I mean Myrna, right? It's like one of those things, man. I promise you, there are billionaires in the market, right? People that invest in the stock market that become billionaires, for investing, let's say, a couple of years, right? Um, you know, being honest, right? Like if you really think about it, right? This Myrna, right? that fucking kid, that guy, right? Keith Gill, right? That's his name, right? He bought that, like imagine buying something like Myrna, right? At the open, man, just millions of shares, right? Think about it, right? Even here, right? And then just buying millions of options, right? And putting an actual solid amount of money into the stock, and it squeezes up to 180 bucks, right? GME was the proper news, but like there are stocks, man, that have way crazy more of a potential, more than even GME, man. That was only a $50,000 trade. Imagine putting like $10 million into a company, right? And he was up almost 50 million, right? He was up to about 50 millions. And dude, a lot of his winnings were from options, right? What percent of his winnings were from that thousand contracts that he had bought? Out of that 50 million, how much was it just from options? If anybody knows, I'd bet it was a crazy amount. Uh, but that's about it, guys. So the simple downside to options are this, right? And just another quick example before we just call it here, and then we'll just do the Q&A, and we'll just let you guys ask the questions if you guys want till about 9 here. But look, right? Same thing with Roku, guys. Look, these two trades, man. I had the fucking worst stocks ever, man. Honestly, worst stocks chose the worst ones. Shorted Roku about at 458, man. Look, literally as low as you could, right? But look, man, I didn't see crazy return on it just because, literally that honestly that Tesla was pissing me off. I had a better entry on Roku, and I was up about quite a money. I'm not gonna lie on Roku, but it's just I didn't take Roku because I had the feelings attached with Tesla, and for some reason I just saw the stocks moving my way. And every other day when I see these crazy moves on some of these stocks, and I'm up 50, 60, 80,000, right? 100K, right? Or so, it's a different feeling. So when you see these stocks moving your way and you're just shocked because you see, not being up that money, right? So yes, psychology is, a lot of it, right? I wouldn't say 100%, I wouldn't say 80%, I'd say about 60, 70%, right? In its own. And then the other 30%, that kind of comes to the whole analytics, right? But I feel like 60, 70% of trading is about discipline, right? Risk management and the psychology, right? All of those three things together make up about 70%. And then there's 1,000 other things: reading candlestick patterns, reading chart patterns, reading volume, reading momentum, reading hundreds and thousands of other things, other small things, right? Being able to see sport resistances, right? The other 30% make up, all of these crazy things, man. And, news and this and that. And so that's that. Hopefully that makes sense, guys, right? That's one of the downsides of trading options. Day trading option, I'd say, the same thing as, doing the same thing. Just think about it, right? Like, think about the same thing, but having to trade through Netflix for, you know, this is my biggest fear here, right? Ever trading options, right? This is the reason why I don't swing trade options. Me being long on options here in the 460s, and then it go just sideways, and then as soon as it breaks out, my options expire. Imagine. Yeah, Piggity, you can message me and we'll talk later, man. But it depends on everybody else, man. It depends on different type, right? I'm not more of a beginner trader, because I it's been so long since I've actually been a beginner, man. But I feel like I can relate to some of the problems that beginners have. But I'm not really too much of a beginner trader, but I feel like, you know, makes sense. 30 plus what? Remember all the patterns. Trader, not really, man. You don't have to remember every. Technically, yeah, I'd guess so, man. Because like, if you really, honestly, like, let's just make it simple here, guys. Markets dependent on two things, right? I feel like you can simplify it down to this exact formula of being millionaires in the stock market. And all that is just bringing it down to emotions, right? Right. um, all it is this: if you can narrow it down to fear and greed, if you are able to somehow, right, if you're able to somehow find the meter of, right, being able to see where there is fear and where there is greed, I feel like that's where most of the patterns occur. That's when you get these crazy, right? Because look, right, so Netflix sell off. Now it's kind of squeezing back up here. This is where people are getting greedy because everybody that longed the sport is now getting greedy here, looking for a 50 EMA or a 200 EMA tag. But guess what? Now, once it starts coming down here, they're getting more fearful. That's what happens. That's why these stocks end up breaking through these support and resistant levels, right? But then guess what? As they squeeze it up, they get more weekends out, right? Everybody that is short, right? They get some of the weekends out. Once the final weekends are out, right? Like the people that just shorted this little bit of a 550 break just because of technical analysis versus the market makers, the actual people that understood that the longer term trend for Netflix is to the downside, right? Those people aren't going to just kind of honestly cut their losses here. They're going to wait for a rejection, right? They're going to look for it. They're going to give it that little bit of a second. But the people that just ended up trading this break here, right, probably end up covering, 1 point down, 2 point down, either way, because that's their strategy, right? Their strategy is a breakout or, literally just a breakout strategy, right? Honestly. But all it is fear versus greed, man. When you're at the bottom of this channel, guess what, man? People are fearful, right? So they take advantage of it by, making greedy people come in, finally buying it up. And guess what? Now, this is where actual fear comes into place. More people get scared. They finally buy it back up. Now the people to the downside are fearful. So all the short, right, term traders, all the weaker hands get out, and finally they do the complete flush down because, once they second time tag it, you almost 100% know that, okay, this is a pretty heavy rejection, right? This is kind of like a hammer candle, right? Boom, reversal, right back down, finally breaking through the trend line or the support again. And, just a complete flush down to your second support or resistance. And look, as soon as you broke through it, usually people will start buying. Somebody like me, even, right? Once you kind of see a stock kind of just crazily go through resistance like that, it usually will go back and test it. So you can trade these quick little moves up or down. But it's just like, would you rather trade, these smaller dollar 50 moves, or you just kind of look for this initial breakout or breakdown? And usually that's where, you were best able to make money, because look, you make these patterns every day. Look, a pennant breakout to the downside, right? If you're just able to find some of these patterns, that's all you need, man. Look, the same exact pattern here, right? All it is pop to the upside, finally try to stay above it. Even if you would have entered in the 542s, look, you would have held for an hour, almost. I mean, not an hour. Yeah, an hour. You would have held for an hour, and still you would have lost what, 50 cents. And look at the downside pay on it, right? If you would have just, shorted this trend line here, look at the downside on it, right? But then if it would have just held, then, ripped up to even the 50 EMA, and look, that would have been just another 4 points. So stock could go any which way. All you're just trying to do is you're trying to risk manage, right? And you're just trying to get a little bit of hints from patterns that you've seen in the past to kind of basically relate to today and see if a stock will move up or down. That's it. I feel like that's just me just throwing crazy amount of info at you guys, and I feel like some of you guys are gonna get confused at it, but that's trading, man. Trading literally is getting punched in the face every day at the open. You have zero clue what's going on after that, and you have to make a decision in that time. That's it. I'm just gonna put Bitcoin on here just so that everybody that missed it like me can just, be annoyed that it's at 56,000 right now. It's fine, man. This is gonna hurt even more. Holy shit. Look, could have bought it at 10,000, man. Could have bought it at 6,000. Look, only a year ago, man. Almost what is this, 2017? Well, wasn't it at 6,000 and What year is this? Trying to look at the date. You guys can unmute yourself if you want. Yeah, yeah. Oh, yeah, only a year ago, man. Look, yeah, a year ago it was at 6,000.
March, yeah, $4,200 in
Yeah,
March.
I was wondering. I was like, dude, am I like smoking something or is it actually true? Like it actually was at 6,000. Yeah, I could have bought it at 6,000, man. Now I just now it's just like somebody asked me the question, man. You haven't missed it yet. It can go to 100,000. It can go to 1,000,000. But the thing is, am I ever gonna be satisfied with this purchase? Now, if it ends up crashing from here, I'm gonna look like an idiot, right? Buying it at the top. So now I feel like I just can't ever justify myself. If I see a pattern break, I'll buy it. Other than that, man, you know, it can just keep on going. All I have to do is just find a nice option play that I can make 100% return on it, and I'll make twice as much what I could have made from this, little bit of a pattern break move on BTC,
Mhm.
if that makes sense.
Can you pull up AMC
Yes.
on the 5 minute?
Yes, sir.
This will be a good example. Yeah, and zoom into like Jan 20th.
We're going back.
Yeah, can we go to Jan?
Yeah.
So 30 days back. When was it? Jan 25th, I think, before this pop.
Jan 25th. 25th. Here we go.
Yeah, so this is another good example. Is this the 25th?
Yes, sir.
Oh yeah. So this is another good example of how you can use call options to your benefit and other upsides. So Manny talked a lot about upside, downside, and day trading, and getting in and out during the day. This is a swing play. So this was the Monday after GameStop craze. The weekend, GameStop was everywhere, and then all the Reddit news started turning to AMC. So the play here was we looked at some call options here on Monday morning, and at the open, the furthest out of the money options were $7 options. So when you're looking at the stock price, you're looking at like $2.90, just under $3 at the open on Monday, and you're thinking $7 are really far out of the money.
Yep.
So the strategy with far out of the money is each option was 36 cents, so it was super cheap. And the play is, if it gets to $7 by Friday, you're making a lot of money. But if it goes from $3 to $6 and it doesn't hit 7, then you don't make any money, right? So it's like really, really low risk and high reward, but the chance of you being right is very low. So the strategy here was really just buy out of the money options. The furthest you can buy on that day, on that Monday, was $7, and they were only 36 cents. And the whole play was GameStop craze. People are looking for what that second one was, and it appeared as if it was AMC. Then you fast forward, that's Tuesday. Tuesday went up a little bit until you're kind of $4. Yeah, this was Monday around $4. And then fast forward to the next day. That Tuesday, it was trending up towards the end of the day, close to 5. So you're getting excited that it's close to $7. And then that Tuesday night was absurd overnight, and you woke up. Yeah, you woke up hoping you'd be in the money around $7. You wake up Wednesday morning at 4, and you're looking at it already crossed $10. So you were in the money on Tuesday night. You already crossed your $7, and then Wednesday morning was just absurdity. Everything between open. So if you look back, you're just crossing $10 at like 8 in the morning.
Yep.
And then, so now your 36 cents options. So let's say you bought, so for those of you, 36-cent options means you have to buy, multiply by 100. So $36 each. And if you buy, let's say you buy 100, so you're spending $3,600. And let's say you buy 10, you only spend $360. Now, when you open here on Wednesday, and the stock price is, I remember the stock price was like $20 or something. It dipped below. Yeah, yep. So it was $20. So if you're, and remember, Manny was talking about how the further into the money, the delta is $1. So effectively, the option you paid 36 cents for is now $12 on Wednesday. So that's about 33 times your money in 2 days. So the chance of this happening is, I would put it at like under 5%, like super, super low. But if you were to hit it, it's like you put all your money on block 4 in roulette and you happen to hit it. And
30
so yeah. So yeah, so it's 33 times in 2 days. And for every, let's say you bought 10 options, $360, you turn that into 33 times. What is that? That's three. So you're about 10K.
Yeah.
So you turned like about $400 into 10K.
Yeah. Yeah. That's true. That's the big thing with option, man. That's yeah, I mean, that's the whole thing, right? Like you can put in a small amount of money and then there's a chance of it rip into, unlimited money technically, right? Just like the same thing, man. That guy, man, 50,000 into 550 million. I think about that, man. That's fucking insane to even think about. Like that is actually insane, man. And then it's insane. It's always the ones that don't put. I don't know how much work he put into it, man. Because I feel like he was just like, holy shit. Because like I remember, like I saw a video of him just kind of saying that he was just messing around, um, you know, about
He
that
was,
top trade, man. So it's crazy.
yeah, he was doing it for 2 years.
Yeah.
He was in here. I'm gonna attach a chart here. This is one of his early ones. That's his first screenshot, and he said he
Imagine
had
trader
options.
Keith Gill. Ooh, I'm joking. I'm joking. He just went silent afterward. Did you hear me? Did you hear what I said?
No, I didn't hear. What'd you say?
I said, imagine James Trader is Keith Gill. Shit, he's got it. Fuck, I can sign off, man.
He just exits.
Just call me. Yeah. that. Yeah, man, it's insane, man, to even think about. Like, I'd love to pull a move like that on, man, but just with $1 million, 500 million plus. Right. There are hedge funds that made crazy money on them, right? Like, what was that, man? 800 million, 700 million.
Mm-hmm.
Crazy, crazy, man. Everybody did crazy. And the funny thing is, man, this is like, even though this seems new, I promise you, there were days like, poof, man, like LMFA, man, right? What, $140, man. And I saw somebody turn crazy money into crazier money at that point, man. $10,000 into what, 1.3 million. I saw somebody do that. Think about it. So stuff like this will always happen. Short squeezes will happen. Low floats are always going to be there, right? Even though that 10,000 wasn't technically, that $10,000 wasn't option play, man. That was an actual shares, $10,000 worth of, I think, shares for that stock for like $3 versus going up to $140 or $50. Insane, man. Like people actually make trades like that. It's just like, a lot of people aren't online, man. The same thing, the whole situation of um, when people do judge, right, traders off of traders that they've seen, right? A lot of people have seen traders on YouTube, right, and think that that's how actual traders trade, man. Actual traders aren't in the beginning of their trading journey, and they're not posting all of their fails. They don't show, right, trades that they lose 5 days out of 6 days, or and then finally 6 day they make some money, and then the 7th day they lose it again. That's not reality. If you're actually good at your job, you actually make quite a bit of money, and that's actually the honest truth. And people say that, oh, this is not right, that's not true, but it really honestly is. Just like any other job, right? Like if somebody is starting out a job, right, anything that you do in life, you're not going to be quite as good at it, right? But when you put 5 6 solid years into it and you actually know what you're doing, you're going to be way better at doing it, right? So one of those things is that's another big situation, right? Yeah, there might be a big buy sport on this company going bankrupt. Which one, bro? Big buy is sporting him else. I don't get it, bro. Kanaya, Kanaya, Kanaya. Well, I don't get it, bro. What's your question? Like, what is it? Oh, GameStop? Talking about GameStop, AMC. Okay, questions. Question here: what strike price do you choose at the money, brother? Or you just look at the one with the volume. Sometimes you don't have that much choice. So what you do is you have to set up right beforehand, right? With options, what you do is you load up some contracts into the active trader. Instead of buying here, you can just buy, on here. So what you do is you set up options beforehand, right? Sometimes you get to choose the good one, sometimes you don't. And yes, I forgot the last lesson that technically I actually made you guys wait for a long time. So what's common in all of my trades are simply this, guys, right? When you're looking at a stock like this, right, the 3245s, right? Now let's look at the open interest and even the volume, right? You'll be able to see a little bit of a better kind of you'll see what I'm talking about here. But look at the whole numbers versus 45s, 30, like Roku, for instance. Like, let's go look at Roku and you'll see what I'm talking about. Look at the 0.5s, right? And look at the whole numbers. Like, do you see the volume on the whole numbers versus the 0.5s, right? It's half as much as the whole number ones. Look, right? So the reason you choose the whole number ones is because most people are going to be invested into those options. That's going to provide you the most liquidity of entering and getting out. So this is the big reason you buy whole number options versus buying 0.5s, fives, anything with 5, 6, 7, 8, 9, right? Something that's like $1, like let's say AMD. If you have AMD options, like what are your trench choices, man? Honestly, look, even though 89.5, look at some of these options, right? Still less than the whole number ones. Look, right? So that's why you don't choose these 0.5 options or so like that. You rather choose the 89. So when you're looking at the open, right? A little bit of a setting up strategy as well, something like this, right? Sometimes it's just better, honestly. Like, there are times where you're looking at options which honestly you don't see kind of good options either which way, right? Then what you do is you just run over to alt product real quick and just boom, you just send an option to one of your free numbers here, and then just trade it off of that. Sometimes you just have to go and find a good option right in the at the time where you're about to buy and sell. But time to time, you don't have quick enough time to kind of buy options, really quick, or, do anything like that. Let's say over here, even here, right? When a stock comes back down to sport, 475, it comes back down to sport and it starts popping here, right? You're not going to have too much time to choose which options you're going to go with. You're not going to go and find 477 options if you have the 475 loaded, because you might as well buy the 475s and just miss out on that maybe 20-cent better entry, better exit with the better volume, right? But you'll make that back on the actual just entry, because you'll enter at the proper time rather than the stock ripping 2 points against you and then you finding the proper option. Because either way, the time it's going to take you to do this, right? Because you're going to have to look too, right? Like the proper volume, proper option, and send it. And then finally going in here, finally clicking on your other screen and actually sending in that order, 30 seconds or so, stock is going to be moving what, $1, $2 in the opposite direction where you want it to go. I mean, in the direction that you want it to go. So time to time, you're not going to choose the best option that you can. You just have to go with the ones that you have. It is what it is. Do you avoid options if the spread is too big? Yeah, bro, we talked a little bit about it, about in a pre-market there, right? I think he's kind of going back to my shop trade here, which is the, ugly stock that it is. Something like shop, man, time to time it has $5, $6 spread. I don't mess with this because look, right, if you're looking at a 10-point move on shop, or even a 20-point move, just because shop ranges a lot, because look, right, if you shorted here in the 1460s, you can maybe see 1440s here, right? You see a 20-point move on options on shop, but on the options, if there's a $5 to $7 spread, you're technically eliminating what amount of profits on this, right? In hindsight, yes, your ask might be, 10 points down or 10 points up on options, right? Technically, but what are the chances you getting actual big ass order filled on options on shop and bottom clicking the 1440s, right? Like, if that makes sense. So $5 spread, it's too much, man. I messed around with it one time. I got caught in it, man. Sometimes we actually made good money on it too. I'm not gonna lie, right? One day we made good money on it. One day we just got caught in it, and it is what it is. It's part of it, right? Like, and the messed up part is, man, it ended up doing exactly what we were looking for too, and it was this day. Yeah, look, we were short this stock, man. Literally shorted it, longed it, then shorted it back again, and then just stopping out because I got tired. I was like, I'm pushing too hard. Traded this like 3 times, man. 3 times. One time to the upside, 2 times to the downside. Ended up giving up. 5-10 minutes later, you see this crazy big drop happen, go sideways. Boom, another flag break. Look at this thing, man. It ended up hitting our target, the 200 EMA. So technically, I was looking for about 10 points, 20 points or so. So it is what it is, man. Time to time, it happens. I ended up paying big time on the spread for this stock. It is what it is. Part of it, right? 90K or so, I was down. So what do you do at that point? You do nothing. You just learn from the mistake. Then look, even though there were many chances of making money back on options and shop, I just couldn't look at myself on this long trade. I was supposed to take this shop long here, the 72, 42, 72, and I could have made exactly my 20 points, but I couldn't get myself to get into these options, man, because I saw too big of a spread. It is what it is. All right. So yes, to answer that question, I do not go into stocks with crazy amount of spread, guys. We're going to give it another 5 minutes or so, and then we'll call it here. But any other questions you guys have? Release, going into crypto, instant billion. I don't think that's how it works, buddy. If it works, dude, I'll join you, my guy. It's all good. Let's go. We'll just go into the crypto mining business and Doge, man. Did from 1 to 1.7, $3 million to $5 billion valuation. Penny stock company and do a press release. Yeah, well, that's that is actually funny, man. What is that stock? UAVS, right? That's what they're kind of saying that this stock is doing, right? That they're saying that they're going to work with Amazon here, but apparently it's it's okay. So this is what's going on, man. Apparently they're saying this company, right, is lying about them having to kind of go work for Amazon, right? That's why it's popping up crazy, right? That's what they're saying. They're saying that this company is lying about the whole Amazon thing, but then apparently somebody goes like, guess what, man? This company is actually lying about them working with Amazon, so it crashes, and then they're just like, that's a short firm trying to basically have the stock price go down because they're short big on it. So now it's like a whole fight of news, right? Like just every day there's going to be news coming out that is this the truth or is this not. Imagine this thing actually ends up partnering up with Amazon, dude, squeezes up 500%, and then guess what, man? That short firm is effed. But most likely not. That firm that shorted the stock either was waiting for this thing to happen, do a fake news on them, and have the stock drop like this from $14 all the way down to $8, and just probably cover in the after hours, right? Or this is actually true, and and they actually did their research and they actually weren't naive as everybody else. Like even I would have been, man. I would have been like, okay, man, they have a chance of partnering up with everybody else. But that's the big thing. I don't trade news, right? So as an investor, I always look at patterns. I don't look at news because I know this shit can happen, man. They can literally lie about anything. And what is the fine, man? Like what? Dude, like the fucking the same thing, dude, the trader's saying, right? Like think about it, man. Do you open a company at, literally 0.011 cent, right? 0.001 cent, right? Just do a press release saying that they're mining Bitcoin or something or whatever. It jumps up to $1.70. He just went from 3 million to $5 billion. And all of that could be a lie. And I believe the fine would probably be like $65 million. Do you think if I made $5 billion off of something, do you think I care about paying that $65, $100 million to SEC for lying? Hell no. Now, right, we just see everybody from data-driven trading, right, open a just list their company on NASDAQ, just press releases coming out that they're mining Bitcoin, right? Is that what's gonna happen, bro? TSNP. Let's see, man. TSNP. Let's look at the chart for him. Just let's go, man. We'll open one, dude. We'll just name it data-driven trading, dude, and we're just data-driven mining. DDM. That's the ticker. Fuck it, we'll take it, man. Yeah, look. Holy shit, man. Yeah, dude, I'd fucking, dude. Oh my god, man. Hell no. Dude, I'd love to do this. This would be fucking amazing. Imagine pulling something off like this and just fucking dump everything, man. I'd just retire as a CEO of this company right here. $1.93, dude. Fucking dump every share I have into it. Take the 5 billion and walk away. If this makes sense to everybody, let me know. Does this make sense? What he said, what Trader said? Dude, it's scumbags, man. It's funny. You can make money like this. You're just gonna be smart enough to do it. That's it. And you're gonna, I mean, there's a proper way of doing it. I mean, you know. First pullbacks, I don't 30 coin, man. You just gotta have the kahunas to jump in at the first 1 minute candle. Boom. That's the whole thing of trading, my guy. Execution, right? Sometimes you have to wait for the first pullback. Yes. But the same thing is, man, it's not the same thing, man. Like, how do you know that first pullback isn't an actual pullback, right? How do you know that the first 1 minute pullback that you're seeing on, let's say, Tesla to the upside or downside? Let's say if we were trading this to the downside, how do you know that this first pullback? No, it's not a better example, right? I'm trying to give you guys a better example of how, it just continues, man. Like, it fails on the first 1 minute pullback, something like this, right? You wait for a first 1 minute pullback to short the stock. How do you know this wasn't the bottom, right? So was it better to short right at the first 1 minute candle? Yes, right? Is there times where it's better to wait for the first 1 minute pullback? Yes. Like on here, you were going to short the stock, but you wait for a pullback, right? After it crashing down here, you wait for the second 1 minute candle to pop up. Then you wait for a pullback, boom, you short it, and then you ride it down, right? But there are times where you wait for the first pullback and it's too late, right? Like here, dude, the first pullback that you just bought here to the downside, boom, you got squeezed. So it's, it's just your strategy, man. I promise you, it doesn't matter. All it is just kind of risk management and, proper entries and proper pattern recognition that you just get over time. But that's about it, guys. Other than that, you guys have anything else? Yeah, anytime, bro. To day trade, bro, time to time is only 250,000 or so, man. There are times where options on Amazon, are like 60, 70 bucks. And sometimes you're going to use, 800,000 or so out of it. But other than that, that's about it. Most hated, my guy. Let's go, man. This is our happy hour, man. I've been lacking, man. I've been busy, doing some stuff. But that's why we haven't had continuous good webinar every week. But hopefully we'll just continue this and we'll have webinars every week. But time to time, you get busy with life. Only strategies like I don't do any iron condors or anything like that, bro. Just straight, quick moves. That's it. You're in and out within the 5 minutes period. A lot of my trades, if you really kind of look at them from my perspective, I think about 50% of my trades are 5 minutes or less. Yeah. All right, guys, we'll call it here, guys. All right, pleasure. All right, you guys enjoy your Saturdays, and we'll come back Monday stronger, right? Of course, anytime, guys.